we actually allow and encourage our members to be a part of the process. And so, great. Do you want to source or screen deals? We'll show you how. We can actually mentor you. We have a framework. We have folks that have already done it, that have learned through us, that can now be, that coach for you. So it's been really incredible because we're literally bringing women up the curve where it's not at the end of the day them saying, oh, I wrote a check because I heard it was maybe a good idea from the person who runs the thing, but I was in the rooms. I heard from that founder. I was asking the questions. I did the thing. And so at the end of the day, we operate just really uniquely. And it's because through this journey of we wanted to change the game. I want to empower women, right? We created something that wasn't there. We didn't use existing white labeled platforms for a community. We said, well, we're going to build the thing that we need.
Welcome to Life After Corporate, your ultimate guide for making the leap from corporate leader to entrepreneur. I'm Deb Boulanger, entrepreneur, executive leader, and founder of the Launch Lab for Women Entrepreneurs. This is your time to break through the glass ceiling once and for all and get your ticket to the C-suite. Come back each week to get the leading strategies, advice, and tools that will give you the skills and confidence you need to replace your corporate paycheck. Are you ready? Let's go. Welcome to another episode of Life After Corporate, my friend. And if you're new to our show, welcome home. This is the place where you get the unvarnished truth of what it really takes to launch and grow and scale a successful and sustainable coaching or consulting business, or any services-based business, actually. And today we're talking with Natalie Levy. Our conversation is about funding with heart, how to step into angel investing and make smart investments in female founders. Natalie is changing the game with her angel investment group. She offers real access to education and mentorship combined with high quality deal making. This show is something that you're going to want to listen to, take notes, and share with others you love. So Natalie is an investor. She's a board director. She's a fractional executive. She runs She's Independent Investments, a women-first investment group allocating capital to women and diverse business owners. Alongside educating and mentoring future investors, she has a background in Wall Street derivatives trading, private equity, and tech, and has an average return of more than 20x across her first 4 tech investments. She is an investor in 40-plus businesses today. Welcome to Life After Corporate, Natalie.
Thank you. So excited to be here.
Okay, great. Let's dive in. So first of all, how did you go from Wall Street to funding and founding She's Independent? Tell us that story.
Yeah. Well, how much time do we have? I'll shorten it. But I started my career on Wall Street out of engineering and studying mathematics. And then how do I even say it? Spent 5 years doing that grind and just kind of hating it, but also loving parts of it. And, it's shaping me as a young adult. And when I ultimately left Wall Street, I said, I'm never getting back into finance. I left, I escaped, let's call it. And I didn't want to be back in that environment where I found myself feeling so awful that I'd have to walk around the block and cry in the bathroom towards the end. And so I left and moved into, tech, recognizing that my skills and my background were really well suited for it. But guess what? Somebody who's very data driven and somebody who enjoys finance, even though she didn't want to, got attracted back into that realm and, joined a private equity firm after a number of startups that I was at. And guess what happened again in investments? Culture, just moments of, wow, I'm not supported, I'm not being invested in. So as much as I loved that learning experience and journey and, hearing about these growth technology companies and investing as an organization, I left finance for a second time. I said, I'm not going back. Wow. That's a repeat cycle. I'd started angel investing actually for fun with some of my younger colleagues out of my Wall Street days and had some really great returns and exits on those early investments. And I started just investing myself. I started doing the angel thing, not under some firm of men above me and folks dictating culture and decisions and all that, but doing it myself. So ultimately, my family went through some really, really rough things. I've shared this and I shared openly. I think it's really important. In 2019, we lost my mother to suicide. 2020, We lost my 17-year-old cousin, Z, who I bring both of them with me in how I live and how I, do my work and show up. And after those losses that I'd left private equity, I've now at a point in my life that I've had this really jarring experience of death and loss and what is life and what is the world. And through healing and taking that really big reset was a big transition for me. And I moved out to Colorado, where I thought about living for many years. And in that journey, found myself finally with the space and time and mindset to say, what do I want to do? And I wanted to do something that helped women and supported women and made women laugh and smile and, maybe cry, but in a good way. And in that journey, these women that I was working with, I ultimately was attracted to, or, the group that kind of pulled me to them were these high-powered professional women. Surprise, surprise, I met Deb, who said, your track record around investing is what? We want to learn from you. We want to give you capital. And again, listening to that gut, which I think a lot of us women have, if we're open, if we're listening, we've all probably read Women Who Run with the Wolves. It's there, right? This intuition, if you're open to it. I didn't want to take their capital. I didn't want to, take the money and run with it and say, well, I'm going to make all the decisions. And also I'm not in a place in my life, frankly, where I want to step into a 12-hour kind of job that just is really stressful. And I said, instead of taking your money, I'm going to do you one better. And I am going to launch formally an investment group where you all can have a seat at the table. You all can be a part of that investment decision and deal making and check writing journey. And that's the really kind of short story for how I got here. But I quickly want to say, when I was leaving San Francisco's private equity role, which was, very interesting, the partner at the firm, the managing partner, really bright, really great guy, he'd said, what do you want to do? What do you want to do next? And when I dug in and I said, well, I want to do fractional executive work. I want to be an investor. I want to have a bunch of companies that I'm investing in, that I'm supporting and helping. And guess what happened? And it wasn't easy. And I pitched certain things to certain companies and they said, we're not going to pay you that, or we're not going to do that because we want you full time. But I made it happen. And I think the reason that all came to fruition was I figured out what was within me, and I knew how to say no. And I knew how to say, no, this is my worth, right? If you're going to work with me one-on-one fractional advisory work, it's $500 up an hour, no compromises. And if you're going to want me to invest or want to work with me in some capacity, it needs to be at this caliber. And by making all of that happen, when I did write a check and I said, well, sure, I'll write a check for 25 or 50,000 or maybe only 15,000. It was on my terms and it feels really, really great. And by the way, with my investment group, our investment group, I don't even want to call it my investment group, we might write a check for 100,000. And it's not just my capital, but it's that collective. All right, let me pause there. I'm sure you have questions.
Yeah. Oh, such an amazing journey and so many lessons that people can learn from you. One is just that level of self-awareness that you had of, number one, I'm really good at this, because it's really hard, especially in Wall Street and in corporate in general. You're not getting a lot of feedback from the outside world that, oh, wow, I'm really getting great returns, or I'm really good at math and I'm really good at picking deals. And so just that inner knowing is extraordinary, I think, because a lot of women don't have that. And then the trust you had in your own intuition. And then when that crisis hit, when you lost your mom in that way, and that sense of loss, I imagine that there was this inner determination of like, if not now, when? If I'm not going to live by my values and this vision that I have of helping women, then, when am I going to do it? Because, tomorrow is never guaranteed. So just love so much about you just as a personality and coming to know you, and love how you've turned this fractional leader role into letting other companies buy your expertise into being able to fund this dream. And I know She's Independent has taken, a few iterations, right? It was a journey and to get to where you are now, but just listening to what people wanted, like, teach us how to make deals, teach us how to be investors. And listening to that, I mean, that's the basis of a really great, successful business model, is something that solves an unmet need in the marketplace. So I am like thrilled for you. And I know, you've given me access to the platform. I can't wait to dive in to spend more time there and spend more time with you in the community. But tell us more about the inner workings of She's Independent. How do people get involved? What are some of the deals that you've been funding and what have you learned along the way?
Yeah, great question. So listen, there's been a lot of learnings every day, every probably minute if I really step into it and I'm fully focused on it. But I think at the core of it, it's how to build a business and how to launch a business and how to scale business where it's what's needed, not what do I think is needed, but organically, how are we creating a path that's equitable and accessible and really smart and strategic? And I'll give you the market, or I'll tell you what's out there in the market and why we're so unique first, just to set the stage. Angel investment groups typically are like, great, let's attract and grab a bunch of people that are, higher net worth. The definition by the Securities Exchange or SEC is you have to have a certain net worth or a certain income, and then you're called an accredited investor. And you can invest in these private deals, allocate to these liquid high risk deals. And because it's always been, I think, this very male driven, hey, this is a cool thing to do, but we don't really have finance backgrounds. It's been this, let's just, herd a bunch of these kind of sheep or high net worth individuals, get a bunch of their capital in these deals, allocate, and then the people who run the group can reap the rewards and the benefits. We wanted to really invent something new and say, well, we don't want to take advantage of folks, women predominantly, but we want to make this something that, again, is a learning journey, a, truly transformation in mindset. So what we said is, well, great. If you're accredited, you can invest. If you're not accredited, we still have a path for you, which is huge, right? Because I had young, diverse women saying, hey, I don't have this background, but I want to do this. I don't have the capital today, but I want to be an investor. And instead of just taking capital and saying, yep, we did the sourcing and screening, we found the deal, we think it's a good investment, you should think about if you want to invest in this, we actually allow and encourage our members to be a part of the process. And so, great, do you want to source or screen deals? We'll show you how. We can actually mentor you. We have a framework. We have folks that have already done it, that have learned through us, that can now be, that coach for you. So it's been really incredible because we're literally bringing women up the curve where it's not at the end of the day them saying, oh, I wrote a check because I heard it was maybe a good idea from the person who runs the thing, but I was in the rooms. I heard from that founder. I was asking the questions. I did the thing. And so at the end of the day, we operate just really uniquely. And it's because through this journey of we wanted to change the game. I want to empower women, right? We created something that wasn't there. We didn't use existing white labeled platforms for a community. We said, well, we're going to build the thing that we need. So yeah, it's been really organic, a heavy operational lift. So I think there's a reason others don't do it this way, but it's really rewarding. And gosh, minting these new angel investors where they're really a part of it and they say, I just did the thing. I led this experience. I stepped into the room. It's incredible.
It's so incredible. It's so empowering. And with women inheriting so much of the wealth in the world right now, and also just women stepping into their power, their value, their worth, asking for more. I'm a huge proponent of asking for more and pricing your services based on return on advantage so that, you're well paid for the work you do. And bravo for you for sticking up for your hourly rate and not backing down from that. But talk to us about some of the deals that you've been able to fund, and who are those women? Because a lot of women don't ask for money because, they don't want to build a unicorn company. They don't want to exit in 3 years. And so they don't fit that standard VC model. So what kind of companies are you funding?
Yeah. So let's get into that. And I'm trying not to give you huge answers, which is why I didn't even touch on that one last time. So first I will say there's VC fundable, right? Like VC scalable trajectory. And then cash flow businesses. There's nothing wrong with having an income cash flow business. So if you're not looking to grow something to the moon, or frankly, you just want to make money on it and you're not trying to exit in 3 years, that is great. That's fine. A lot of women-owned businesses look like that. That's not the type of business that we're investing in or we're funding, right? We're looking at those kind of VC backable. They don't need to be positioned to be unicorns. And I'll talk about what we look for. And unicorn, for anyone who doesn't know what that is, means $1 billion valuation. So as a early stage investor, and we can invest wherever we want. We don't have a mandate, meaning we can truly invest in really early stage or later stage if we want. But where we really enjoy investing is what we call, or what the industry calls, kind of a seed plus round. So just to define that, when a private company is going through different stages of their fundraising journey, it starts with pre-seed, seed, seed plus, series A, B, C, D, on maybe they, IPO or get acquired at some point. So we're investing pretty early. The reason we like investing early is, first of all, if the company is raising, $500,000, $1.5 million, a few $1,000,000, our check for $100,000 is going to go further. If they're raising $10 million, they may not even accept a check that's $100,000, right? So we have more, let's say, power, or I don't want to even call it power, but it's more meaningful for them, and they're that much more, grateful to have us and more, willing to accept our check if they're earlier in the process. Additionally, there's the concept of, if you invest in a business that's a lower valuation and then they get acquired or grow to much bigger and then you exit, you can make more money there. It's higher risk to invest early. By the way, that's why we typically aren't doing pre-seed or seed. We really like that seed plus. But at the end of the day, it's a kind of a question of how good is your sourcing, right? How many good deals can you find at that stage? So you can make more money, but you can also lose more money, based on risk. So we're typically investing that seed plus. It does not need to be a women-owned business, but we love women-owned. We love diverse-owned. We have this, again, no mandate where it has to be a certain thing. And let me just quickly break this down for you. If I was a fund and I had LPs, limited partners, investors in my fund, then I would have something that we've signed, and it says, this is what we allocate to. But we're not a fund. We are truly this, investment group where everybody can invest on a per deal basis. So we don't have this mandate of it has to be a narrow thing. And because of that, we can invest in any sector, any vertical, any stage. But where we're seeing, the most interest and where we're really getting excited to invest, to your point of, where are we allocating? We've allocated to 14 deals to date, we've done more than that, but 14, let's call it group deals or syndications. So we're coming together to form, that one investment check as a group. And what's really interesting is 8 of those have been healthcare or health tech.
Interesting.
I don't have a healthcare background. I had no idea that would happen. But guess what? We have all these phenomenal women, and it's all been organic, referral, word of mouth. Hey, have you heard about this great group? And the amount of amazing women and folks that come to us with healthcare backgrounds, the sourcing, the amount of, that we're able to put into diligence and asking these questions. I'll give you an example. One of our deal leads, Dr. Edong Esiat Gibson, is just one of the fantastic women, right, who has healthcare background. She comes from a gov and healthcare background. And so going to these bioscience conferences, right, finding this really great deal flow. Hey, where she's independent, we're looking to invest in women and diverse founders. Guess what? The deal flow we're getting is fantastic. I'll give you a few examples of recent deals.
Yeah. Give us, and let us know, how does someone know that they would qualify to even speak to you at this stage?
So first I'll say, do you have a business where you are either women or diverse owned, or maybe you're, a cis white man? Fine. But do you care about culture? Do you, have an underlying mission that's going to either maybe help women, or you're bringing women into the board, you're bringing women into, the business at an executive level? And do they have real ownership? So first, that's kind of a just qualifying, have to have one of those things. Then, is it a business where it has that kind of venture trajectory? It could grow to something bigger. It's not just cash flow generating. Hey, we're not just trying to build and grow this cash flow machine and just kind of run this brewery, out back. But is this a business where we can see it scaling to 100 million or, a few hundred million? Do we have a path to exit? And hey, maybe we only see it scaling to 50 million, but right now we're raising at 5 million and we have a really good trajectory and really great acquisition opportunities. So having that venture trajectory is really imperative. And in terms of stage, we don't want it at the idea stage. We want to see some execution. What do I mean by that? It does not need to be a built product where you're making money on it. But have you done the research? Have you done the digging? Maybe you've started the product build. Maybe you're, pre-market in terms of revenue, but the product is built. So have you executed? Sometimes we've done pre-seed. Maybe you come out of a really great accelerator like Y Combinator. By the way, I pull this stuff out. I think you have to. I've heard from numerous Black women. Y Combinator does not do a great job of supporting or, bringing Black women through their program. That's a problem. I didn't show up at the last Y Combinator pitch day, right? I mean, thinking about, right, where are the sources, but it's a great accelerator. And if you come out of there, right, you're probably going to get better funding. Techstars is another great accelerator. But anyway, we're actively sourcing companies. We don't want them just coming to us, but if they come to us, we love to understand, well, how did you hear about us? Was it through somebody you knew, a trusted channel? Either way, we're happy to screen and take a look. But you need to sell us on, and you need to sell any investor on, why is it going to work, right? What have you executed around? Why the team? Team matters so much at early stage. So let me pause there. Let me give you a few examples of companies, or one example actually of a company we just invested in recently.
Sounds great.
So a company we invested in is called Aztec Diagnostics. They have a platform. So basically something that works for a specific use case, but it's going to work for other use cases. But it can identify UTIs in under an hour and the patient sensitivity to antibiotics. So incredible turnaround. Wow. Because ultimately what happens is if it takes days or a day for that turnaround and you're not able to identify, is there a UTI, you give them the wrong antibiotics, it's a whole problem. And by the way, we know women are disproportionately affected by UTIs. It is a diverse male-owned business. Mustafa talks about his mother, right? And what a strong woman who raised him and cares so much about women. And by the way, we went through that process of looking at the business and diligence. And we said, well, you have this woman, who's such a key player on your team. We looked at the ownership or the cap table, the capitalization. Why doesn't she have more equity? He was open to those conversations and appreciative of our feedback. So that was something that we invested in. We were really excited about.
So a lot in the health tech space and product space. Are there any services-based businesses that you would consider investing in? And what is the criteria for someone with a services-based business?
That's a great question. And even when you open up this podcast, I was hoping you'd bring it up. It's kind of a tough one because when you think about valuations, right? Services-based businesses they just don't get the same types of valuations. They don't have the same, I'd say market potential, vast potential of kind of acquirers, because to take on a services business, the margins are typically not nearly what a product or SaaS business has. Software as a service business when I say SaaS. And, how many, strategic acquirers care about services businesses? Again, margins aren't as good. It's maybe not the same kind of accretive, repeat revenue kind of structure that you can have. So would we be open to it if it looked strong, if it looked like something that we saw a really good path for scale and we saw some really good data points? Sure, we'd be open to looking at it, but it's not something so far that we've invested in. I will say some of the businesses that we invest in have a services component, right? Mm-hmm. And a lot of times a services component can be a really great approach to whether you're funding the business or you're learning a lot, but then a lot of people are going to productize or, create something that doesn't require so much of the services because of those margins, because of the profitability. So I'll say that. And I've worked with businesses that have, a strong services component, so I know it well. And by the way, it kind of kills me when a business approaches us for funding and it's a women's community, their services, and they say, hey, would you give us funding? And it's tough because I know the business so well. And I know how tough it is from a, whether it's scaling or profitability. And so it kind of kills me to not fund those types of businesses. But at the same time, we're marrying, deeply driven mission. And by the way we operate, we're giving so much. It has to be these really, quality investments, just given how we operate. And so we can't say, well, we love you so much, we're just going to invest. We have to see the upside. We have to see the potential exit. But hey, at the end of the day, who knows? Maybe we acquire a services business at some point, right? It's not that services businesses aren't great, but I'd say it's not typically that venture trajectory we're looking for.
Do you think the combination of services and the advent of AI and, creating a tech component into that services-based business, right? So ed tech companies, for instance, is there a market there for investments when you've sort of automated the client experience and it becomes inherently more scalable?
I think if you make it scalable enough, you've productized it. So you're taking AI or whatever and you've built a product. So back to my point, if you can make it a product and something that really can scale, and we see that potential venture trajectory, sure. And by the way, a lot of folks are using AI, all this new technology, and they're putting some layer on it. And so they're productizing it in a way, but how much is really inherently theirs versus, how much was kind of open sourced and already on the market. I think it's really important to dig into those things, but numbers don't lie. So digging into things like, not just the story, but okay, are we seeing something that is starting to scale? Is it actually working? Because I think a lot of folks are using words like AI, and they have been, by the way, for a decade plus, or machine learning, where they're not actually embedding it and using it in the way that they say. And so every business probably has a story for, and we're going to use AI to do this, or we're going to build this, right? And I would say great, but I want to see it. Like if I'm going to invest in a thing, I don't want it just to be a story, or I want to see this is the legwork and this is the mapping and this is the right team to do the thing and build the thing if I was going to invest before it was built.
Yeah, absolutely. And I do believe, even if you go on Shark Tank, the first question the sharks ask you is how much have you sold? What's been your experience up until this point? And I do think there's a lack of unique expertise in the services space in general. There's a lot of, generalists out there, and there's a lot of people who sound like other people. But I do believe that there's an opportunity to blend technology and machine learning with unique expertise to bring scale into some services-based business. So I'm really interested to see how that plays out. Before we go, I know that you are passionate about also that investing in ourselves, our mindset, our headspace, our health, finding balance in life. That was a large part of your journey and continues to be. Let's talk a little bit about that. How do you work with women in your community to make sure that they're taking care of themselves? How do you incorporate that in your own life?
So I'm going to answer this, and I care so strongly about it. But one thing I want to mention about the last question quickly, because it's so relevant.
Okay.
We are actively talking about how to use more AI because we are not just investors, we're also a services business, right? And I just think it's such a powerful one. And I'll be very upfront. It is such a heavy operational lift. If we don't figure it out, then we're stuck. We're stuck here at 120 members and we're servicing them and we're doing all the things. I want us at 500 or 1,000 members. So your question is so spot on for things that intelligent business owners need to be thinking about. Services businesses are really, really tough to operate sometimes at scale. Okay, let's talk about mindset. And first, let me just say, pause, take a second, take a breath. So much to say, so many thoughts. If I hadn't already been investing in headspace, in mindfulness, in yoga and movement, in how to keep my body healthy and how to keep the right nutrition in my body, how would I have even gotten through, the loss of my mother as I did? And I think it's not just about a superficial pill, and Instagram or influencers might try to make us think that, oh, if I do a yoga routine or if I watch a yoga routine on my phone, I can breathe better. That's not what it's about. Are we taking time and space for ourselves? And right now, as an example, I am sitting in a medical device because I had a bad ski injury late season. So I don't know, 4 months ago at this point, 5 months ago, I had a couple of surgeries because there was a complication. And I'm doing PT 3 times a day in clinic twice a week. And I'm still showing up for myself. And what does that mean? I'm not just working. I'm working, but I'm finding time for myself. And this stuff isn't easy. But every time you go through something tough, difficult, every time you say, I am going to learn from that, I am going to take the reset, I'm going to take the space, you're learning new skills, tools. And for me, it's as simple as, and it's not easy, but it's as simple as understanding the boundaries and exercising them and continuing to exercise them and saying, you know what, I need to go do some yoga in the backyard with my dog who's going to cuddle me a little bit while I do it. I'm not going to take early meetings And yes, right now, 8 a.m. Mountain Time is early for me, which I took with Deb today because it was worth it. Because I wake up and I say, well, this is my routine and I'm going to go on that walk and I'm going to have my mindful coffee. No, I'm not going to listen to other people that say you can't have a coffee. Like, do the things that you want to do for you and appreciate it and find the gratitude in, how you show up and what that day looks like. And I think the way that I operate these days, which is really different than how I used to, is I find that space and I find that balance within myself so that when I show up to the workplace, when I show up or I'm at a grocery store and somebody else is in a bad mood, their bad mood isn't going to get me because I'm already in a good place. And if you're at the precipice of you're just running around and you haven't taken that time, of course you're going to get upset. Of course your day is going to be ruined when somebody honks at you or whatever the thing happens. But by showing up professionally and throughout my life, right, in this way, I've given others permission and I've given them, something where they'll start talking about the thing. Wow, Natalie, you sharing on loss, you sharing about the headspace, you sharing about your time off. Now I can do the thing. Thank you. Right. And just by showing up differently and having the conversations with whether it's people that I've hired and people that, I'm doing fractional work with or people that are investing with me, it changes everything. And what's incredible is because we haven't been paid growth on our community, it's all been so referral, organic, word of mouth, or I'll speak on a panel and I speak like myself. I'm not, trying to emulate some man before me, but it's, hey, you might be crying when you listen, but I'm going to tell you things that hopefully are going to change your day and maybe your life, right? And it's not just about optimizing for our wallets and the investments. Smart decisions, smart investments, but what are you doing for you? And it shouldn't just be working every day. And I think as women especially, we're pulled in so many directions. If we don't learn that, what are we doing to invest in ourselves and to take that space? I mean, we're just going to crumble. And hey, the leg's a good lesson, right? I was skiing too hard late season and it was a lot of fun. Could have been worse, but it's that lesson always of, all right, slow down, take the reset. So I learned only about a year ago, actually, that I was neurodiverse, taking, time and space, holding that and saying, okay. And I never got upset. And by the way, I never got depressed about the leg injury that takes a year to get back to sports for.
Oh my God, what mindfulness that takes to just be with it every day. And you're laughing. And, I know it's been a painful journey for you too, physically painful.
Physically painful.
And, I'm so glad that you brought this up because this is the true gift of entrepreneurship and creating success on your terms is that you get to take care of you. I'm right there with you. Thank you for getting up with me at 8 a.m. your time. I don't start my day until 10. So this was my very first meeting of the day. And I have a 3-hour morning routine. And meditation is a huge part. And I went on a week-long meditation retreat this summer for 7 days, 25 hours of meditation over 7 days. And now my routine just got longer. And I'm like, okay, how did we fit all of this in? The hour-long meditation, the 45-minute walk, the, taking care of the dog, the sitting with my oatmeal cappuccino in order to just like kickstart and feel whole and woken up.
I don't want to even move on from this yet because I just have to say, like, age plays in. I just turned 40. And by the way, for my 40th that weekend, I was weaning off Oxy. But whatever, light. And recognizing that as we're getting older, our bodies are getting older, our minds can get stronger. So what you just said about having a longer routine and doing more yoga or doing more meditation, there's nothing wrong with that. And I actually think it's brilliant because guess what? My 40-year-old body, it didn't want to be jumping on the slopes this year. And I pushed it too hard. You have to listen and you have to slow down sometimes.
You have to slow down. And when you're 20 years older, as I am, sometimes you have to make sure that you speed it up. It gets too comfortable and too all-consuming mentally when you're running a business, and especially when you're so jazzed about what you're doing, you have to force yourself to step away from the desk, to leave the computer behind and go out, get fresh air. And what you also said about really good emotional boundaries, I also want to emphasize that. The reason why I meditate for so long every morning is because there's no stinking thinking allowed in my universe. If you want to have a bad day, you go have your bad day on your own time, but I'm going to protect my space, my energy, and focus on what I'm creating here because age is just a number. You can move as fast or as slow as you want, as your mental capability, as your mental capacity and your ability to receive is going to allow you to. So, Natalie, I'm so thrilled that we're kind of ending the episode on this uplifting note, is that you've covered so much ground. Number one, if you're looking for investments in your business, Natalie just gave you a roadmap for what qualifies you for investing. If you want to become an investor, an angel investor, and you've been afraid, you've been thinking, I don't have that much money, I'm not an accredited investor, She's Independent will give you the education, the opportunity to do that on your terms. You get to pick the deals. There's so much value in what you're bringing to the world, and you're just such a bright light. I am just so grateful that you're here. And thank you for spending this time in the interview and sharing so generously with our listeners. I'm just really thrilled to publish and promote this episode. Thank you so much.
Thank you so much, Deb. I love what you do, and thanks for having me.
Well, before we go, how do people get involved in She's Independent?
Check us out. She'sindependent.com is our website. You, of course, can find our YouTube and, various learnings. We have some public-facing events that are free. So, be in touch. You can also follow us on Instagram at she'sindependent_. And let us know if you have any questions, membership at she'sindependent.com. And I'd love to welcome some new folks.
Love to see you there. So we'll publish all those links in the show notes so that they're easy to access. Natalie, thank you so much. Really, I'm so grateful to you and your generosity of heart and sharing your knowledge with us today.
Thanks again, Deb.
That's it for now, everyone. We'll see you next time on Life After Corporate. Thanks for listening, my friend. If you enjoyed this show, please head over to iTunes and subscribe and leave us a review. And be sure to hop over to the Life After Corporate Facebook group and join other growing entrepreneurs to get weekly tips on how to create more money and meaning doing work you love.